Cool. Welcome to the Bridging the Banking Divide panel. Pretty famously, about 2 years ago, I said to Amanda Haverluck on my team that, man, I was so sick of doing banking for clients, and it's one of the only things we do, and it's one of the most relevant questions in crypto today. I will kick it over for introductions now. On my left, we have Lawrence Truong. Lawrence is the CEO of Binance Canada and UDP for Binance Canada Capital Markets, Inc. He holds CFA and CAMS designations, as well as MBAs from Queen's University, Cornell University, and has over 25 years experience in financial markets across front and middle office roles with FIs, hedge funds, and large corporations. In capital markets, Lawrence traded billions of dollars in spot FX, fixed income, and derivatives. And Lawrence, do you want to share your fun fact with us?
Thank you. Thank you, Ryan. First of all, I want to thank the Canadian Blockchain Consortium for organizing this amazing summit. I also implore everyone here to participate in the raffle that I've donated 2 tickets to the weekend concert in LA, and I want you guys to enjoy this, that amazing concert. I wish I could have brought every one of you guys to that concert. We do sponsor the weekend for his 2-year After Hours tour. So please support the Glenn Rose Foundation. It's a great cause. If I win the tickets, I will redonate them back to be re-raffled. So my fun factoid is that my family came to Canada, and we came to Canada via fishing boat, 7 days at sea, and so we were in a refugee camp in Brunei for 3 months before coming directly to Alberta. And so my fun factoid is that my family had a real world use case for crypto and international remittances. And if we had crypto back then, we would have been able to get out of Dodge, out of Vietnam, a lot sooner than the 5 years it took my family, my parents to save enough gold and about $30,000 for the 5 of us to get out of Vietnam. So that's my fun factoid.
Next, we have Dina Mainville. Dina is the founder of Collisionless, a consulting and advisory services firm that provides strategic guidance, fractional management, and outsourced staffing solutions to blockchain industry. Since 2016, Dina has advised global governments, regulators, law enforcement agencies, blockchain companies, and large FIs on blockchain initiatives in crypto. Dina, share your fun fact with us.
Okay, my fun fact is that I'm actually a digital nomad. So I spent 8 months last year living throughout South America, and I am embarking on another journey in about a month's time, going to Chile.
Wonderful. Next, we have Joseph Siebert, Managing Group Director and SVP of Digital Asset Banking at Signature Bank. Hopefully everyone in the room is familiar with Signature Bank. It's a household name in crypto banking. Love to have you on the stage. Joseph Siebert serves as Managing Group Director and Senior VP of Digital Asset Banking at Signature Group, NASDAQ SBNY, a New York-based full-service commercial bank. He was appointed to his role in January 2018, and his team of 25 specialize in serving companies engaged in digital asset banking, blockchain technology, and oversee all aspects of private client commercial banking related to fiat settlement for cryptocurrency and blockchain technology firms trading digital assets worldwide. Siebert currently manages in excess of $30 billion, that is a big B, for the cryptocurrency ecosystem. Joseph, do you want to share your fun fact with us?
Sure. Thanks for having me. And I was 20 or 21, and after a night of long partying in Florida, I had passed out on a beach and woke up next to a seal, cuddling with it. So to this day, I don't know if my friends put it there, but there was always this area where seals would wash up, and it was pretty scary because I just woke up to seeing whiskers. It was kind of wild.
And just to clarify as well, this was the first question I asked: was the seal alive or dead? The seal was alive.
Yeah, he was alive.
Godfather moment on the beach. The seal's dead. Last, we have, but certainly not least, we have Philippe Nalting, VP of Corporate Clients and Partnerships at B1 Financial, where he focuses on solving banking needs for clients globally. I love to see that everyone on the panel has some real-world skin in the game with banking. Philippe's team at B1 helps onboard and manage key accounts in over 70 countries, ranging from crypto protocols who need reliable banking services and access to fiat currencies like USD or Euro, to traditional companies like real estate developers and brokers who want to accept crypto but need to limit their exposure. Share your fun fact with us, my friend.
Hi. So my fun fact is I really like good food, or I guess I really hate bad food. And I used to go to a lot of conferences. So I grow my own peppers and I make my own hot sauces and spice blends. So anyone who likes good food, let's share a bite later.
We'll have our first disagreement of the panel. I like terrible food and hate good food. I am a ruthless moderator when it comes to time, so I will be cutting people off freely. We'll run through questions, hopefully have some questions for the audience, and where possible or impossible, I'll be interjecting with my own unwelcome opinions. So just so you guys know what to expect. Our first question, and I typically do round table. I'm not going to call anyone out. Just, you guys can go first, go second, go third, go fourth, go again, whatever you want to do. The cryptocurrency industry in Canada is heavily regulated. Don't I know it? But the financial services industry still views it as having a high risk profile. What are some of the reasons that this might be the case? Why are FIs thinking that crypto companies, despite their size, volumes, etc., are high risk? Lawrence, maybe you would be the most relevant.
I don't know. I mean, I guess relevance is relative, but I think that couple of points on that is, well, one would be sensationalizing of fraud in the industry, right? And where you have high returns and FOMO and not enough education to investor public. I think it lends itself to the fraudsters and scammers out there, like and people are easily fooled, right? When they don't have enough resources to understand, who are the legitimate players in the marketplace, what are legitimate assets, and people get fooled, right? FOMO, it certainly is great, but also it's a double-edged sword, right? The other point that I want to make is around AML risk, right? And all of our all of the banks and financial institutions that we talk to about partnerships and services, and their biggest concern is AML risk, and it's legitimate. I completely understand it, having completed my CAMS designation. People can go to jail, right? And so there's a legitimate reputational, legal, financial, and criminal risks, right? So I mean, I want to build the best processes with the best team possible, and trust, and that's how you build trust. Is it takes a long time to build trust, and you got to start with foundation.
Yeah, so I would say that maybe one of the number one challenges that I see in the financial services sector as it relates to crypto is misunderstanding or miseducation, or just things that are really not true. I can't tell you how many folks that I still speak to today who think that Bitcoin is opaque and we can't trace through it. I had an amazing conversation with the CEO of a very, very, very large global bank last week. And, the question was, why would anybody ever want to buy Bitcoin? And I kind of told him why it was compelling for me. And when we got to the part where, it has a fixed monetary policy, and it's highly divisible, and there will only ever be 21 million Bitcoin, the lights kind of went on in his head, and he was just like, as the head of this bank, we've been public about how we're not really supportive of the crypto space, and the problem is just too big to ignore. So I have an obligation to my clients, to my constituents now, to actually learn and to be educated about how we're going to approach this space. So I think that's one of the common things that I see.
Fear. I think a lot of the financial institutions and banks are afraid of what it takes to adopt this type of space and funds flow. From a regulated financial institution that I work for, we have so many cooks in the kitchen when it comes to telling us what we can and can't do. We have the FDIC, we have the NYDFS in New York, and one of the biggest problems is regulators don't always get along either. So you have all these governing bodies that want to have their say. And unfortunately, when you have that protection of FDIC insurance, you have to abide by those regulations. This year didn't help. The depegging of stablecoins, we all saw what happened with Terra. I think scared off even more banks, and especially in the U.S., maybe even here in Canada. And I think that it's going to take another year of coming out of this scared time for banks to actually say it's not so scary. But you have to develop a program, and we have great leadership at our bank that from day one adopted this space and wanted to learn more and spend resources on it. So yeah, you can't be afraid to spend resources. You got to have infrastructure that understands it and hire smart people, and I think that no bank wants to do that. They want all the other ones to fail first and then say, oh, we'll pick up the pieces and do it. But there's only a handful of us that really have done this right in the US and Canada. And I think that the fear will go away. But when events like Terra happen, it just makes it worse.
Yeah, I completely agree with that. I would say I'm going to take it a little bit of a different approach. I think there's a huge, both in Canada, but also different jurisdictions around the world, there's a lot of protectionism. And protectionism that's not necessarily in the best interest of individuals, but protectionism that might be in the best interests of large fintechs or large banking institutions or things like that. And so I think it's not a uniquely Canadian issue. I think Canada does have a little bit more of a history or comparables in that sense. If you look at like our telecoms or media companies, things like that, we're highly oligopolistic in that sense. I think we can all agree that competition in the capitalistic markets we live in is a positive. If you look at what happens, Canada is still the most expensive telecom country in the world, in the developed world. And if you look at the services we get versus our counterparts in the US, it's just mind-boggling for the fees we're paying. And so I think there's a lot of parallels to be drawn in the financial space. I don't think it's necessarily by design. I think there's just this nationalism that occurs naturally. And when you look at the purpose of blockchain, it's to break down those types of barriers, right? That's part of the reason why it's so attractive to so many people and to so many countries and different areas. And so I think there's going to have to be that sort of reckoning at some point where a country can't own, the control of Bitcoin. It just, people will do what they want to do. And if you don't offer that in your own country, in your own jurisdiction, they're going to find other ways. And that's where a lot of the problems, in my opinion, come up. When you're forced to go outside of your jurisdiction to do things with, maybe less regulated or less controlled kind of bodies, that's where a lot of risky things can happen, which really scares the crap out of people naturally. And unfortunately, the reaction on regulators is typically to double down on their protectionism. So I think it's really just an overarching issue on that side, not necessarily Canadian-based only. It happens globally, but it's one of the things that in Canada we're dealing with in many different industries. So I think, it's amazing to see, Joseph here with Signature Bank, but it's a little sad to see that they're probably the most prolific crypto-based bank in Canada, and they're not even Canadian.
I just want to make a comment on both Phil's and Joe's comments and connect I think one point about stablecoin. I think that there's not clarity and on how the regulators are going to oversee stablecoins, and from my perspective, it's not so complicated because there's this framework or this around NFTs, right? And so there's property NFTs versus like NFTs that have characteristics of a security or derivative, right? And so that should be similar to how they view, in my mind, anyways, my simple mind, about how they should view and regulate stablecoin. And I think without clear regulations, it's challenging for innovators to work with, right? And so again, like stablecoins, like fully backed stablecoins should be like a digital representation of fiat, right? There's no you don't earn a yield on, and you don't have ownership behind the entity that mints and operates the stablecoins. In contrast to like maybe like a Terra Luna where maybe because it's not fully backed that it's really more of a derivative.
Yeah, that was one of the biggest problems. The whole stablecoin arena, if you look at Tether, they were in commercial paper, they were in, they just got out of it. Now they're in treasuries, and the inability to audit it is what gave banks a hard time in the U.S. for, like, you can't bank Tether or Bitfinex in the States. They can't. They have to be offshore. And that started this whole trend of, well, how do we do this right? So then Circle came out with USDC. The hops, with stable coins are what banks are afraid of. You can't just figure out where that goes. And that scares, a lot of banks off, because the AML risk, the penalties imposed, and then the reputational side of it is what scares off the bigger banks. They say, well, we don't need to support this industry. It's not big enough yet. It's not validated. It's not regulated. We'll find deposits somewhere else. Then the regulators say, well, if you are going to take it, you have to collateralize those deposits. You maybe can't lend them out. Now you have to keep collateral aside for stablecoin deposits. That makes it costly. So the only way to do it, I think, properly is what they're trying to do now, is have this arm wrestling fight of who's going to take over the regulation. Is it going to be the CFTC, the SEC, and then have banks issue them and not stablecoin administrators, or have them become licensed as a bank, in which Circle's attempting to do.
I mean, I think we heard a lot of relevant points there. Like, everybody's always talking about consumer fraud as the biggest boogeyman in crypto, as if consumer fraud doesn't happen in government issued money. And I think one thing that we all kind of nosed around, it's the same kind of logic that says, oh, well, Bitcoin mining uses energy. Are we assuming that TradFi is a zero energy? Do terminals run on unicorns? I don't know. Like, the energy usage of TradFi would dwarf the energy usage of Bitcoin mining. But I think, like, we all kind of touched on this, like, we are hyper regulated, but, government money really isn't. And I don't know if we can solve that problem on this panel today. Maybe we can. And we have the right 4 or 5 people here. But I think it would be relevant to move to the next question, which is, what are some of the ways that better access to financial services will help the crypto industry grow and benefit the entire economy, as seen in friendlier jurisdictions, not frenular, like Portugal and Texas? And one thing that I heard you say, Philippe, is, like, if you can't access it in your jurisdiction, you're going to go somewhere else. And, like, one thing that I always mention about banking is, if I have an account that I receive customer funds into and I send those funds across a border at a customer request, I have to file a report. If the customer sends them out of Canada themselves, there's no report for that transaction. So we're actually creating opacity by limiting access to banking. So what is our goal? Is it regulations? Is it transparency? If it is, we should bring it in country. But, I'm digressing as a moderator. What are some of the ways that better access to financial services will help the crypto industry? And let's go that end to this end this time.
Sounds great. So I think the biggest issue here, and we've seen it in Canada for years now, is without the right access to the right services, financial services specifically for the blockchain space, you are forced to find it elsewhere. So as individuals, that means going to different exchanges that are maybe not regulated in Canada. For companies, like, one of the things I love here is we're all representing companies that are trying to propel this space forward, building real things for real clients and real use cases, right? We're not sitting here saying rah, rah, Bitcoin, right? This is not Miami Bitcoin conference, right? So when you really think about what we're all here doing, it's to do exactly that. It's to bring real infrastructure, real services to those who need it so they can run their businesses here. We're seeing this massive brain drain to places like the Bahamas, to places like Portugal. Last week, Portugal announced their new digital nomad citizenship by investment sort of scheme. And, like, the one before was one of the best ones in the world already. Now, if you make 3,000 euros a month, they'll welcome you with open arms and citizenship in a country that has some of the nicest beaches in the world, that, real estate's still relatively affordable. You're now part of the EU. There's a lot of benefits on that. EU has slightly better regulation than we see here in Canada on that. So we're really just pushing great companies, great people, and great money out the door every single day by not having real access. And that's going to take regulators to actually make decisions, whether it's the right ones or wrong ones. You make it so people know what the rules are, they can play around them, and they can start welcoming people with open arms in their own country. right? Canada used to be this beautiful place where attracting talent was our top thing. And unfortunately, in the blockchain space specifically, we are undoing decades of amazing work. So I think that's the first piece is just you need it to run your business by law. And if you can't get it, you're going to leave.
I don't know where Texas gets all the credit for this, but maybe from the carbon footprint or lack thereof for mining there. But if you look at New York specifically, it gets a bad rap, but the DFS put out a bit license application so that they can actually move forward entities with licensing. Look at Bermuda. Look at some of these other jurisdictions that don't have the ability to issue licenses quickly. And not saying that the application process is fast in New York, but they're green listing tokens, they're green listing stable coins, they're green listing projects so that you can take New York customers and beyond. So I think if you look at Circle and some of these other companies like Binance that have tried to work with it, they're becoming more successful doing business all over the world. People go offshore because they can get licensed faster or they don't license there. And what we've tried to do is say access to financial services shouldn't just be a checking account. It should be a loan. So we came out with a program to do BTC backed loans, maybe introduce Ethereum down the road. And our regulators were kind of scared because we're a big bank, and they said, well, how much volume are you going to do? And look, if you collateralize it like a security and you margin call it and you make sure you have the right collateral in place, it's the same thing. All it is another asset that you're lending against. And people are scared because it's the volatile asset that runs 24/7. So they don't know how to manage it. But if you use a blockchain tool to manage it, you can manage it 24/7. And that's the other problem. Nobody understands there's tools like CipherTrace, chain analysis. You can monitor activity all the time. You can trace coin activity from here to Norway. You can know every stop it makes. You may not know who owns that cluster at the end, but you can watch where it goes. Exactly. You could form an LLC and it's a shadow entity that's owned by 20 trust companies, and you don't really know who it is.
So a couple of thoughts here. Like fundamentally speaking, we can't build businesses without money. So we need the banks to participate. I run a consulting company and I couldn't open a bank account because I've got a career in crypto, which is crazy because most of it's spent in regulatory compliance. I work with governments and companies to help them comply with the regulations that are being put out by regulators. So it's a bit of a paradox. And to your point, I mean, we're also fundamentally talking about an asset that is more transparent than any other financial asset we've ever had in the history of money. And so, again, I think this goes back to the education bit. There's also, I think, a bilateral learning opportunity that we're not capitalizing on. So Pam Draper, who's the CEO of Bitvo, said yesterday that what we're seeing is these really nimble tech companies that are now starting to basically operate like banks. Crypto companies in Canada have to be registered with FinTrack. They have reporting obligations. They have very robust compliance programs. And the antiquated banks that do not want to modernize are losing the opportunity to join this revolution. And so I think a better conversation between the fintechs and the traditional banks would be really constructive to helping us all build a more efficient and inclusive financial ecosystem, which is what we're all here to do.
I think for myself, greater access reduces friction, right? In terms of managing your float. If you have to send international wires, again, because actually, I was going to give an example, which was, it's easier to get banking with a U.S. participant or financial services with a U.S. bank than it is to get banking in Canada, and therefore you have this triangle of operating your business and having to send international remittances, which creates a disjointed or there's a settlement gap, right? And then so you have to fund that, and it's expensive, right? So there's that friction there that you need. We need local access to solve, and then access to capital, right? And so better access to banking will increase the the willingness and participation of big capital.
I mean, I don't think we're like talking about legality or illegality of any of these businesses. We're all running legal businesses here. And Dina, I had the same problems as you. My bank was like, oh, you received a bank wire and then you sent out some payments. And I'm like, have y'all heard of payroll? Like, I have staff to pay. It's not an in-out wire. I'm not treating you as a correspondent. But I mean, I said this earlier today. I mean, it doesn't matter if our business is legal if we can't accept payments and can't pay staff. These are the fundamentals of running a business. And I mean, who knows?
Funny, I don't think either one of you applied at Signature though.
Yeah. Well, save that for after the thing. By the way, I'd love to access Signet, and I'd love to help you bring CAD to it, my friend.
Yeah.
Well, help me be on that roadmap. Third question: what steps do you think the industry can take to gain better banking access, and what role can government play in this process? And I am going to heavily restrain myself from answering this question first because I am the chair of the Access to Banking Committee for Canadian Blockchain Consortium, and I am the hardest working man in show business when it comes to getting our clients access to banking. But I'll let everybody else be smarter than me, and then if there's any scraps to pick up, I'll take them.
So, dear chairperson, so in the limited time that I've participated in your committee, I think that one of the things that we could do is to better educate the industry on the standards it takes to build trust, trusted businesses, that will enable our stakeholders, our external stakeholders, the financial institutions that we have in Canada and not just the U.S. To have a level of comfort, that there's support, from the committee to educate, startups and people that are looking to build companies and enable our industry to flourish, right? And with respect to government support, I think that it's very, very needed and valuable. I mean, I want to give a shout out to the Honorable Doug Schweitzer for his work, the amazing work, incredible work that he's done or that he did, and over, and the example is from 2017, there was a massive change in the amount of investments that we made in fintech in Alberta. From, I think in 2017 it was like $50 million, and in 2022 it was $500 million, and that shows the value of support from government, right?
So I think one thing that crypto companies or blockchain companies can do is work with financial institutions that are welcoming to them. So Signature. But I also think there's a really important role for government to play. So as I was prepping this morning, just like kind of collecting my thoughts, I Googled, why do crypto companies not get bank accounts? And the first thing that came up that I clicked on was a paper written by the European Central Bank. And in the introduction, the paper states that crypto assets lack intrinsic value. And because of their frequent use in financing illicit activities, are highly risky instruments. We also saw a paper out of the White House, OSTP, which is their Science and Technology Policy Division. These are people that are supposed to be providing guidance for what position the US government should take on things like crypto. And the idea behind the paper was, is Bitcoin really bad for the climate? And this paper leveraged non-peer reviewed blog posts, essentially, from crypto hobbyists. It did not incorporate any knowledge from actual subject matter experts that work in this space. It presented no new data. And so we've got governments and esteemed banking organizations that are perpetuating, truthfully, like really shitty information. And you've got, companies that want to operate in space that are looking at this and internalizing these falsifications, basically. And so I think that our governments need to do a better job of not being lazy in this space. We have to engage with industry, and we have to make sure that the narrative that's being constructed is factual and it's right.
Yeah, and that's a great point. I mean, it's so, even though we're so friendly to the space as a bank, it's so frustrating to see the questions we get because of the lack of knowledge and the refusal to learn about something as simple as what is Bitcoin. And we will literally get a question like that from a new analyst at a new regulatory firm that wants to come in and understand your business, but they don't take the time to educate themselves. We've actually introduced the blockchain tools to a lot of the government officials. A lot of the, the Secret Service uses these tools every day, and the FBI. So the funny thing about it is we've helped them with a lot of cases where we've had to go find, the bad actors, and it's so easy to do it, and that's, again, where the lack of knowledge comes in. It's, oh, well, they think it's not transparent. It's fully transparent. It's there's parts of it that aren't, but you can still see the lack of trust. And it's frustrating to us as a bank when you have to deal with these same, nominal questions over and over and over again, years into it. We're now in year 5 in this space for our bank, and we have 2 governing bodies, and every time they turn over staff, we're back to square one. And it's really, really frustrating.
Yeah, I think I'll echo the education piece is a big one, but I think it's a more of a macro problem. I think we really need to take a step back and decouple all these notions that people have on, blockchain is not Bitcoin. Blockchain is not just currencies. The fact that, you're a consultant in the space and you can't get a bank account is absolutely ridiculous. That really doesn't make any sense. And so when you look at the opportunity for blockchain globally, it's bigger than AI. It's bigger than a lot of these industries that governments are investing in because it's maybe flashier. I'm not really quite sure why it's not being given the respect that it deserves. But it can change the fundamentals of pretty much any industry that runs our economy. From real estate, the efficiencies that can be gained from just taking your real estate firm and bringing it on blockchain with, maybe property management and paying rent and all these things. Canada has this opportunity and we're just unfortunately not taking it. So I think it's going to take a giant effort for everyone to realize that, Ethereum is a Canadian product, right? It came out of Waterloo. Most people don't realize that, and Canada should be incredibly proud of that. But you'll never hear any government body talk about that for some reason, which is so sad. And you look at, we're here in Calgary, I'm based in Ontario, just even the differences between province by province is terrible. Here, at least there are, ATBs and credit unions that'll give you accounts potentially, maybe if you write the right thing on your website. But in Ontario, you're really seeing this giant, brain drain because they don't have that. And when a credit union tries to jump in, they get shut down. There is this overarching sort of control that, the Canadian Big Five have, where they can shut down your account with no explanation, no matter what, at any point for no reason. They can freeze your funds for no reason. And you've got some like the best security firms in the world who use blockchain, like the FBI. They use blockchain. They build software to make the world a better, safer place, and they can't get a bank account because it says blockchain. So I think the education piece is a really, really big one. I think regulators working together, province by province, country by country. This is a global problem. Yes, obviously we need to fix it for Canada, but this is already one of the biggest evolutions in human history that we'll ever go through. It's new money, it's new processes, it's a new internet, it's a new way of really thinking about data transfer everywhere. And the world runs on data. If you haven't really seen, all of our data is owned by a handful of companies. So I think it's on one side sad. I'm not trying to be doom and gloom here, but I think it's a wake up call. I think we all need to, there should be really good blockchain education courses, even in high school. And people should know about it. They should know what it is. They should go home. They should educate their parents on it. They should have projects on researching this stuff, not Bitcoin, blockchain.
So I'll chime in with two witty points, and then we'll move to the last question. One, in a rare first, I was not the first panelist to swear on this panel. So that is 100% a first for me. The air is usually blue around me, so congratulations, Dina. And the second one I would say is I know there are some maximalists here that would disagree that we should be proud of Ethereum being Canadian, but I had to take the easy punchline. Last question. Are there success stories? By the way, I'm not a Bitcoin maximalist. I just did that for the punchline. Are there success stories in Canada of companies that have built stable relationships with traditional banks or credit unions, and what were the key differentiators for them? We'll have about 1 minute per person, and then we'll jump into questions.
So this is where I would like I give props out to Connect First Credit Union, a local institution, very progressive, willing to cut its teeth in this space, eager to learn and grow their book of business. And I was very fortunate to have built a relationship with Connect First in the last two companies I was with, Tetra Trust, and there's some of you out there, Tetra, woohoo, and CoinSquare. So and congratulations to CoinSquare for being the first IROC dealer member. So props.
So I had a bad experience, but I will say that I've spent the last 4 years or so working with CipherTrace and now MasterCard. And I will say that companies like this can look under the hood of a crypto business and tell you, yes, they are compliant with their regulatory obligations. We can see, for example, that they have a really robust onboarding process. We can see, we can look at their on-chain transactions and see that they're actually not facilitating transfers to nefarious sources. So maybe the advice for the crypto companies is just keep being legit, like keep doing what you're doing and following the rules. And there are lots of companies out there that can actually help you prove that you are doing things by the book.
Yeah, we have helped a lot of Canadian entities, and I'm proud of that, but we need to help a lot more. I know it's a sensitive topic for some of the Canadian banks and credit unions that may be in this room, being a U.S. bank, but, we're global friendly. We help, entities in Asia, Europe, Canada, the U.S. We don't discriminate. And I think that's a form of what you went through. They Google your name, and because you're tied to something that they don't know, you're blacklisted. We don't do that. We do everything case by case. We have a lot of the clients are in this room. We've mentioned a few of them, Lawrence and some others. We look at each arm of your entity, where your jurisdictions are going to lie, how your funds flow is doing, and we try to help. And I think more banks need to do that and just implement the tools. Get CipherTrace, get Chainalysis, understand the business. LinkedIn has a learning map for Bitcoin. You can get a fifth grader to get on there and learn about it. It's really that simple. But we're proud to help a lot more of you if you still do banking.
I'll answer this one with kind of two anecdotes. One of which, again, I've mentioned the most prolific Canadian success stories in banking is a U.S. bank. So that says it quite a bit. Now, I have a friend who runs a crypto-based business, and this is actually quite interesting. He was told by one of the big five that they'll happily give him an account as long as he has over 20 million on the books that they don't touch. That sounds, I don't know how that's not illegal. They're then taking that out. They're running more business out of it, and he's not allowed to touch it, or else they'll close his account. But they went out, sold equity to raise money to get a bank account in Canada. So is that a success story? He has an account.
Yeah. I think everybody's nailing it on the head. And I think what would be the greatest success story for access to banking would be if the government would make it illegal to decline people for bank accounts when they qualify for the service. That would be amazing. Any questions from the audience at this point? Oh, got a hand? You could, or you could take this microphone. Oh, okay, we got it. We got a floating cube. If this is like a game of Mario, there's a floating cube. Okay, good.
things though. But my question is, as more so someone on the individual stance, obviously we still have to work with banks for rent and loans and fun stuff like that. But as someone who supports Bitcoin and cryptocurrency, it's hard to kind of bridge that gap where, yes, these banks are shutting down everyone connected to crypto, but as a sole investor, you want to get into crypto. What kind of tips and tools would you give people, not necessarily on the corporate level, but more on an individual base, to kind of straddle those two worlds?
That is a great question that I'll pass to the panel.
So there are banks out there who will block any retail payments to crypto companies when they can see them. So it doesn't matter if you're sending to Binance or to some unregulated tiny little exchange in Panama. They'll just block it if they know it's crypto. And so as a consumer, you can make a choice not to work with those types of organizations. I went through something similar where, many years ago, I was trying to buy Bitcoin at a regulated exchange in Canada that's run by former bankers, and my bank just kept shutting everything down. And so I think that's one thing that you can do, is just migrate to the banks that have a more crypto-friendly attitude.
Yeah, and the payment side for institutional is a little different than retail. So you're going to have that trouble if your bank can't connect to PayPal or some of these other platforms that are adopting it and giving you the ability to trade. It's hard for me to speak to that in Canada as a non-resident, but as a U.S. resident, we go through that based on what state you live in. So if you're a New York resident, you don't have access to certain exchanges, and that's tough. So the way around it for us is applications. There's apps that you can go on, and then when you're traveling, you're technically not in that state. You can buy and sell crypto. So unfortunately, that's the way it is right now, and I don't think any of us can really change that until people understand the funds flow, and that's going to take a long time. I think institutionals first, that adoption, and retail is going to be far behind. I don't know how many people in this room use Bitcoin to buy and purchase goods, or if you would want to do that. But if you use stable coins, they're still shutting that down, and it's a stable coin. It's backed by $1, so it's a tough question to answer.
This one's quite personal for us. That's kind of why we built our business. So B1 is designed to be, it was retail first. Now we focus mainly on corporate, but we've got clients in over 80 countries specifically for that. Digital nomads were our first clients, people who might not even have an address anywhere. You just can't get a bank account. And so we've built a platform that is really designed to do, onboarding made easily. So, KYC is done through remote opening on your phone. Fiat and crypto seamlessly in one. We kind of grew through exactly that, where people were sitting on a lot of, putting a lot of their net worth into Bitcoin, but they can't buy a house, right? One of our first customers anywhere in the world was actually based out of Georgia, which is a very tough place to get a good bank account that works with corresponding banks, who wanted to move to Portugal and buy a property. Now, he had over $50 million worth of crypto. All legitimate, runs his own protocol, does really, really fantastic things for the space, couldn't buy a flat, right? So, we came in, allowed that kind of thing to happen, worked with the banks locally to make sure that they're accepting euros coming from a SEPA transfer into their account with our due diligence on top, because it's, that's our expertise. So it's doable. It's so transparent. It's so much easier. It's so much clearer. But unfortunately, there's this huge defense. So, we're happy to help. There's a couple others. We took a global approach. So, always adding currencies and always growing our corresponding banking networks. But we're not a bank. We work with banks for the fiat, and it's our job to make sure that the banks we work with allow you to make those things. Now, unfortunately, it means sometimes having to go right through, SWIFT transfers for something that should be super simple and almost free. You end up having to pay a $50 fee or something like that. But it's broken, but there are solutions. They're starting to grow. There are opportunities to keep your passion alive, to keep supporting, to keep investing while actually living, paying rent, buying food. We just became a Visa Principal member. Soon we'll be rolling out cards to be able to do the same thing. So you don't have to go in your account to do anything like that. You just tap it anywhere in the world. It'll credit whatever the retailer needs. and you could just hold your crypto. But that's pretty robust in terms of 5 years of building to get there. There's going to be a lot more coming out soon, hopefully.
I just want to add that you're like a prime, example of what the Canadian financial institutions are missing in the new next generation of people in Canada that the next the big market, right, is that there's going to be always this use case when blockchain adoption is in its full glory. So I don't want to say like it's coming, right? Obviously, because there are solutions out there. There's payment networks, layer 2 protocols, which are here, depending on how tolerant you are. And our company globally is working on grassroots adoption of payments and building a merchant network to compete with the likes of the incumbents like Nestle and Visa. So I mean it's in other parts of the world, and it's a trend that's going to become a tsunami at some point, right? And I hate to say again, like it's coming, but it's coming.
I mean, Amazon's, I don't know if you're looking at, who's getting hired where, but Amazon's, one of their fastest growing divisions is their global payments division, which kind of tells you like we're Amazoning the whole world now with all your finances. So is that good? I don't know, but it's coming.
Yeah, I mean, Canada's not even getting TradFi right. Like, we don't have IBAN products. We don't have seamless access to signing up sub-accounts with payment platforms and fiat currencies. Yeah, 100%. So, I mean, I feel like the conversation that you want to have is the conversation we all want to have, and the conversation we've all been trying to have for years. But unfortunately, there's no easy answer. And I mean, I hear all these kind of horror stories of people like, I can't buy $50 worth of Bitcoin on my CIBC Visa card. No diss to CIBC, that's just what first came to mind. But then we have retail fraud cases where grandmas are wiring in $2 million after they sold their houses for a romance scam. And it's like, who are we protecting by preventing this $50 buy for a retail investor? But we have a lot of stories from the Phantom Archives that maybe would take up the rest of the question period. So next question.
Hello, yeah. So thanks for the panel, but I had a question. There seems to be an ideological gap between traditional banking systems and cryptocurrencies around what money looks like, what good money looks like. And obviously the cryptocurrency people are arguing that their money is more sound and more healthy for a functioning society, but that plays into the fears, I think, of the traditional banking sector. So how, over the long term, how does that relationship pan out? Does one side wash the other? And yeah, just your thoughts and opinions around that.
I think that there's an opportunity to work together, and there'll be a bridge, because the financial institutions they do get the idea that this is a tsunami that's coming, and it's going to overtake them, and so they are throughout organizations with the senior banks that I've talked to. They want it, they want to adopt it, they want to partner, but for they're overcoming that risk, right? And there's a contingent of very senior folks that they're not quite ready to give up the reins, right? But they know that they're going to have to, because otherwise they'll be blockbustered. Blockbustered, is that a term? At hashtag blockbustered.
I would say,
No, it's always.
I'd win. So I would say that one thing that we should probably be mindful of is when you look at this through like a political lens. Let's say Bitcoin. Bitcoin is problematic for sovereign nation states because it's borderless money. Let's just call it that, and that's a problem because it becomes very difficult, if not impossible, to conduct monetary policy. And so governments globally are very much incented to make sure that this works so that we can continue to have government and a functioning society. So will there be a future in which, maybe governments don't exist? Potentially. None of us will be around for that, I think. But right now, I think the biggest opportunity that we can sort of harness is this idea of collaboration, right? There's a lot to learn from these, again, as I said before, very agile tech companies, fintech businesses, and we can create a better version of money. The transparency that crypto offers it's not one-sided, right? I mean, since the latest financial crisis, faith in our financial system is declining globally everywhere. And so this is a real opportunity to build bilateral transparency, not just seeing what the end consumer is doing with their money, but how is the bank actually, internalizing blockchains to provide transparency in terms of operational processes and whatnot. So this is a real opportunity to modernize and to create better money for everybody. This is not an us against them. As a society, we have an opportunity.
I mean, this is why we built Signet. It's a permission blockchain, and we have transparency. So it's, we call them Signet tokens. It's a digital representation of your fiat, and we hope to add Canadian dollar to that at some point. But the overall theme is cash is still the number one total launder today around the world, and there's no arguing that. And government doesn't want to hear that, because that's an easy out. What they want to do is shine the spotlight on these cases where you have, a few bad apples spoiling the whole bunch. You have some bad cases of use of crypto, but not nearly as much as cash. I mean, it's actually not even close. The stats are really out of control, and that gets swept under the rug. And it's really a shame, but I think banks can look at permission blockchains, and they can't be open source yet, but maybe down the road.
I first of all totally agree with all this. I do think there is a future, hopefully not too far from now, where they live side by side. There's always going to be a use case for, country-based currencies. There will always be a use case for people-led currencies. If they work together, everyone wins. If they don't work together, it becomes a big nightmare. But I think there's something about the traditions and the processes that people have gone through that's comfortable. It's safe, even though it's not as safe, right? It feels safe because we're going to go through it process XYZ, and we know that if we did that, then at least our butts are covered, let's say. I mean, banks have not evolved that much in the last 50 years in terms of the services, even though technology has, done amazing things for other industries. The fact that you still have to go into a branch for a lot of things is ridiculous. A friend of mine bought a condo in Toronto. He was living in Hong Kong. They made him fly to Toronto to sign the paper in person. Okay, like that's not a blockchain-based issue. That's a banking core issue. Give the services that technology powers to the people to make banking better for everyone, not related to crypto or blockchain. Now, blockchain is one of those technologies, and some of the largest banks in the world are already using it, but they're just not making it available to the end user. And I think that's probably the biggest issue. It's a technology-driven problem. And if you don't look at it through the lens of technology, you're going to look at it through the lens of processes. And changing processes and habits are one of the toughest things to do for human nature.
I want to add on to that, and I think that government and financial institutions or traditional financial institutions, what they're not seeing, or maybe they're not prioritizing, or the understanding or the vision behind blockchain is that blockchain is going to fundamentally change the way economies work and businesses and industries work in the not so distant future, and it's going to and crypto is the foundation and settlement layer, right? And so it has big impact. And so if they're going to wait until businesses take up the grassroots from crypto and implement blockchain in their supply chain, in the real world use cases for blockchain, it's going to be too late for them. They're going to be blockbustered.
And I'll do the final thought. I mean, I think that the question of why would we even argue about what's better money? Let users decide what better money is. Provide free, unfettered access to both government money and crypto money, and let's Pepsi challenge it. And if people want to use crypto, then they'll use crypto. And if it's easy for them to use crypto, they'll use crypto, and remove the ideological thing from the discussion. I mean, I had to make a payment and it was like Saturday and I didn't want to go into my bank because I live in rural Alberta. And then I was like, wait a minute, I have a bunch of accounts tied to crypto exchanges. Why don't I just move it in 5 seconds right now? It's not a better money. It's not an ideological discussion at that point. It's what helped me do what I needed to do. This has been fun.
Huge round of applause for our panel today. Thank you.